Okay, ladies and gentlemen, welcome and thank you very much for your time today to join us for this particular webinar. As you know, we are living in strange and interesting times where our businesses are being severely disrupted. And whilst the medical profession is probably not being disrupted as much as obviously certain other industries, we are seeing and hearing reports of, general practices not getting the same sort of patient numbers they would before. There's obviously a number of patients who are preferring not to go to their doctor over concerns regarding the virus, and obviously presents, some fairly extraordinary challenges for us at this particular point in time. And, the medical business is like any other business. I mean, it obviously needs to make sure that it has enough money and cash to ensure its long-term survival. And it's with extraordinary pleasure I get to introduce you to Alan Miltz. Alan Miltz is a chartered accountant. Nowadays, he travels the globe presenting and advising businesses on how to manage their cash. He's also a co-author of Scaling Up, which is a seminal business book on the running of a business, and also co-founder of Cash Flow Story. So, Alan, can I pass over to you? But what I'd like to firstly just let everybody know is there's a question and answer panel down the middle bottom of your screen, Q&A. So as questions arise, can you please type them into there? And at the end of Alan's presentation, I will then moderate a Q&A session with Alan. Without any further delay, over to you, Alan.
Thank you so much, Paul, and it's always a pleasure to represent your amazing organisation. And as you said earlier, what interesting times. I'm getting a phone call every hour of every day of companies calling me in distress, and the conversation is about cash, cash, cash. So the topic of today's conversation is obviously about cash flow and understanding your business. So what I'm going to do today, I'm going to present a definition so everyone will understand what their business looks like. And then I'm going to choose a medical center, and every number is the same, except I've changed the name of the medical center. So let's get the show on the road. The first thing, Paul, people listening today and people in your database, I'm going to make available my technology for 3 months, free, no cost. You can do absolutely everything in the system. It will give you a health check on your company, and it will enable you to stress test your numbers as well. So if you take a picture of the website, www.cashflowstory.com/stress test/AM, you will have access to the system. And I've also made, in the Learning Center, I've made some videos that will help you, medical profession, understand the numbers. I've made a 30-minute video explaining exactly what the numbers mean in your organization. So the company I've chosen as my first case study is the MILOK, and we import and distribute medical consumables to medical practices. So the company has been doing very well until the COVID crisis impacted in March 2020. So let's have a look at the financial statements of the organization. Revenue has grown from 21.5 to 24 million. So revenue is up by 12%. Margins have grown from 7.8 to 9, and operating profit has grown by 22% from 1.88 million to 2.3 million. And after interest and tax, MILOK has made a 1.5 million profit. And I start every talk and I end every talk the same way. Revenue is vanity, profit is sanity, cash is king, and I should say queen as well. Today's times, cash has never been more important. Now, every single business or medical practice I ever go into, everyone understands your profit. We can all read revenue, margins, profit. But the problem is nobody really understands what cash flow is. The accounting profession has made the balance sheet and cash flow such a complex topic, but we can make it simple. Definition number one, what does cash flow mean? If you start the year with $10,000 in your bank account and you end the year with $1,000 left in your bank account, what is your cash flow? -9. So cash flow definition, number one, net cash flow is the change in all your bank accounts. So all I need to do when I'm looking at my business is to look at all my bank accounts. So MILOK, your cash at the bank has not changed. Your short-term debt has grown or has decreased in this case from 3.1 to 2.8 million. We've improved our cash by 300,000 because our debt has reduced. And our long-term debt has not moved, stayed the same. So our movement in our cash flow is positive 300,000. And this is what's happening in every business. Every company I'm going into says business is great, revenue, margins, profit is growing. And then I ask them the most simple question, what's your cash flow? And they look at me with a blank face. So the first thing you've learned today is every single month in your medical practice, ask your accountant, ask your financial person, what is the opening bank account and what is the closing bank account, because that will give you your cash flow. So as I said to you, revenue is vanity, profit is sanity, cash is king. Cash flow is the movement in all your bank accounts. So when I'm looking at your business, what I want to know at the beginning of the period, what are all the bank balances? So in MILOK'S case, we owe the bank 4 million. At the end of the year, we owe the bank 3.7. We've improved our cash flow by 300K because our debt has reduced. Now, cash flow is the result of a business. That's the result. What a story of numbers is told over 4 chapters. If you want to understand your numbers, you cannot only look at chapter 1, profit. Every one of you, whether you're in the medical fraternity or not, understand profitability. And MILOK has done a great job. They've made 1.5 million. Equally important in a business is what I call chapter 2. Chapter 2 is your working capital. How quickly people pay you, your receivables, how much inventory do you hold or consumables, and how do we pay our suppliers? Our suppliers, you might have doctors who work for you on contract. Chapter 3 is the rest of your balance sheet. Are you investing in new equipment? So in other words, what I want to know in a business is, MILOK, you've made 1.5 million profit, but your cash flow was only 300,000. What happened in chapter 2, and did you spend any money in chapter 3? So when I reconcile the MILOK group, I can understand that. Now, ladies and gentlemen, this is the heart. Every one of you who run a medical business want to improve your profit, you want to improve your cash flow, and you want to grow the valuation of your practice. There are only 7 levers you can play with in a business to improve your profit, your cash, and your value. And I call it the power of 1. There are 7 levers. There are 4 levers in profit, and there are 3 levers in working capital. So in other words, if you say to me, my medical practice is making $100,000 cash for the period, I want to make it 200,000. My answer is, let's go through each one of these levers one at a time. And the levers are price, volume, cost of goods, and overheads. In working capital, how quickly we collect, how much inventory we hold, and how do we pay the suppliers. Now, when you enter the numbers into my technology, you only need to enter 6 numbers. The system will produce this for you, and it's the power of 1. So in the MILOK group, for example, if they put up prices by 1%, their cash flow improves by 190,000, and their profit improves by 240. If they grow their revenue by 1%, their cash flow improves by 43,000. So what you need to know in your business is the relationship of price to volume. What is the sensitivity of price to volume? So if you want to improve your cash flow, a 1% price increase is the same in MILOK'S group as almost a 5% increase in their volume. So what you need to do is have a look at your business, enter your 6 numbers, evaluate your power of 1, and then run a power of 1 workshop. So in other words, put down these 7 levers and discuss with your team, what are the changes you can do in each one of these levers? Which of the services are we providing where we can put prices up? How do we purchase better or get a better rate per hour from our doctors? How do we control the overheads? So as I said to you, put down your 7 levers and then have a discussion with your team. For each one of these levers, what are the changes that you can put in your practice? So I'm now going to take up an actual case study of a medical practice in Queensland. I've changed the name of the practice and I've called it the Alan Miltz Medical Centre. Now, the Alan Miltz Medical Centre, if we look at their financial statements, it's a fairly big practice. Please excuse, for some reason, the internet's dying. So it's a fairly big practice. This medical practice employs 7 or 8 doctors. They do 2.7 million of revenue. They're making 1.037 gross margin, and they make a 242,000 profit. So this medical practice pays their doctors, I think, 60% of what they earn. So the practice is making a 38% margin, and it's making an 8% profitability. So they're fairly happy with how the practice is going. So when I'm looking at the profit of 242,000, and then I look at the cash flow of this company, even though they made 242,000, they've only made a 30,000 cash flow for the particular period. And the medical practice came to me and said, Alan, we are very unhappy with the fact that we're only making $30,000 in cash, even though we've made 240,000 of profit. What can we do? So what we did is we entered those 7 levers. Let me go over it again. And your cash flow. There are only 7 things you can do. And these are the 7 levers. It's called the power of 1. So the power of 1 is then produced. So in other words, in this medical practice, if they put their prices up by 1%, their cash flow will improve by 26,000. If they grow the practice by 1%, they'll make $10,000 of cash. If they improve their margins, in other words, they're paying their doctors 60% of what they earn. If we can pay our medical practitioners 59%, we get a 16,000 improvement in cash. So what you need to do is to say, what is the problem we're trying to solve, and how many 1%ers can we change? So for example, if we put up our prices overall by 5% and we grow our volume by, let's say, 6%, I will improve the cash flow of this medical center by $200,000. And this would then become the strategy that I would implement. So what I'm saying to all of you today, you all want to obviously give the best medical advice possible. But in the same way, you need to run your business as an efficient organization. The power of one is the code of a company. How many 1% or one-day changes do you need to make to achieve your desired goals? So in this medical practice, depending upon what they can do, we might also say we can pay our suppliers 5 days slower, and that would add another 22,000. So by just implementing those 3 changes, without having to work a lot more, I've grown my cash flow from 30,000, I've increased it by 220,000. Now, Vern Harnish, who I work with, is one of the great strategy people in the world. Vern Harnish, whenever he gives a talk, he says the following wonderful statement: the main thing is to keep the main thing the main thing. So when I'm looking at a medical practice, the reality is you charging out time, you charging out hours. What you need to understand in your medical practice is the concept which I call the power of an hour. So let's say, for example, we've got a doctor in this medical center. We pay the doctor 50%. It means the doctor is getting $125 an hour, and we, the medical center, are getting $125. The doctor thinks we're doing extremely well, but the reality is you need to explain to the doctor that after this $125, we've got to pay staff wages, property expenses, medical consumables, head office costs, general expenses, advertising and marketing, medical consumables, and IT, for example. So the doctor says, well, I'm making 125. The doctor thinks you're making 125. What you then need to show the doctor is, do you realize we actually are going backwards by $11.57 an hour? So the most important KPI in your practice, for the company as a whole, it's the power of one. But when you drill down to the micro, what you need to work out is for each doctor, what is their revenue per hour? And then you need to work out the techniques. And I'm sure Paul can give you some ideas what they've done in their medical centers. They've done an unbelievable job. But one of our key goals, one of our key KPIs are what are we doing to grow our dollar per hour per doctor? That is the heart of your practice, because in a practice that's employing multiple doctors, the doctor needs to win and the owner needs to win as well. But doctors often don't realize that even though the medical practice is getting a percentage, after that percentage, there's a lot of overheads. And if you don't have the right billings per hour, you might be losing money every dollar or every hour the doctor's working. So we then need to come up with ways. And at HealthCert, at our medical clinics, we've got very clear KPIs, and I'm sure Paul will give you some ideas of the KPIs we've got in place with the sole objective of improving our service, obviously, identifying melanomas, but in the same way, seeing more patients and increasing the dollar per hour. So I started today and I said revenue is vanity, profit is sanity, cash is king. I'm going to end the same way, and I'm going to end and saying the power of one needs to be implemented in every one of your practices. Go through each one of those 7 levers and work out what is the biggest bang for buck and which levers can we pull to achieve our desired cash. Then I'm saying to you, another interesting thing you can implement is what is the dollar per hour per doctor? Make that a KPI and work out what are the things we can do as a practice to improve the revenue or the dollar per hour per doctor. So I'm going to stop sharing and I'm going to hand over back to Paul.
Thank you, Alan, very much. I appreciate that. And once again, just a reminder, if you've got any questions, just to go to the Q&A panel, which is at the bottom of the screen in the middle. You'll see a little Q&A in a box. If you click on that and type in any questions you've got, I'd be happy to pass them on to Alan. I think sort of out to Alan's point, sorry, I'm a black box. We can run one video on this. So as Alan mentioned, we've got 9 medical practices. They're skin cancer centres, but they're effectively medical practices, which have been operating. I mean, I've been running clinics for the last 20 years. And to Alan's point, you know, around some of the things that we look at, because, you know, what's interesting, of course, is you'll have 2 doctors in a practice or multiple doctors in a practice, and they all bill different per hour. So one of the things that we looked at was we got the numbers on all of our doctors, you know, in all of our practices. And then what we looked at is what's a doctor who's high performing? What are they doing different to a doctor who is low performing? And what we tried to look at there was trying to understand why, right? So the great thing is that you can pull reports out of best practice or your EMR to get what they're doing. But effectively with most practices, they're getting the same patients, right? I mean, the people are ringing up, coming in, and, you know, they're generally doing the same work. You know, someone's not self-selecting all the really valuable or pay well item numbers versus the others. So what we then is we looked at those numbers, and we then had a conversation, you know, with the doctor who was the lower performing doctor around the fact that maybe they could have a conversation with the higher performing doctor to learn from their experience. Now, we ultimately know some people are slower, like to have a chat, you know, there's all different things related to that. But what we found is when we looked at the numbers, there were doctors in our clinics that were costing us money to be in the building. Because as Alan shared, there's a minimum dollar per hour we need to turn over to pay the bills. And ultimately, if somebody's not meeting that minimum threshold, then we might be in a position where we're basically, they're costing us money. So I think, look, it is an uncomfortable conversation to have with doctors, obviously about money, but I think to Alan's point is what he's trying to say is that, you know, the fact is that, you know, we do have to make a dollar. You know, patient care is obviously number one, but also if we're able to, as I said, put up our prices, the doctor benefits as equally as what we do, right? So if we put up the prices by $10 and let's say it's 50%, just keep it even, it's, you know, $5 for each of us. So any changes that we choose to make, you know, are going to be in a position where we benefit from it both. Now, a lot of practices, as you know, are either bulk billing or mixed billing. You know, looking at the different segments. So we looked at the different segments. We got people under 65. You know, what are we charging them? You know, if we put up our prices by $5, would the patients walk out the door? Now, what we found is they don't, right? If you're a good doctor and a good practice, you know, a small increase in your price is not going to scare your patients away. Put it up 20 or 30 overnight, then yes, you are probably going to have people that are going to be, you know, may look for alternate options. Then once again, you can look at what you're doing with your pensioners or for, you know, people with concession card holders. Once again, can we put up our prices a little bit, which helps the business a lot, because a lot of that money drops straight to the bottom line because a lot of your costs are fixed. So rent is fixed. Whether you got 1 patient or 1,000 patients, it doesn't change. Most of your staff costs are relatively fixed, right? So we can get you know, a 5% increase in volume, but we don't have to put on 3 more staff to manage it. So what we do is incrementally put up our prices twice a year. We then looked at the different industry segments. Now we've got 9 clinics spread across 4 states. We charge different prices in different places based on what the market can bear. So, you know, some places we charge, you know, well, so we're doing skin cancer work, 120, in other places we're charging 155. Now, interesting enough, the place we're charging 155 is in Hobart, which is, you know, you wouldn't see as the most affluent part of the country. So I think that, you know, the other measures that we do look at, just to share, I suppose, the KPI side of it, is obviously how full are our doctors, how much of their time was used during that day. So we use utilization. So how many patients cancel or anything like that to see if there's any issues around that. So at the moment with the COVID virus, we're counting the number of cancellations every day of that and tracking it forward, right? And what we found a week and a half ago when the first announcements were made, we were having 160 or so patients a day cancelled. That's now flattened out to about 70 across our group of 9 clinics. Now, the reason we're measuring or looking at that is to see what impact that's having on the practice. So, for example, if we had a 20% drop in patients, does that mean we're only open 4 days a week? Or do we change the times that we're open? I know all of these challenges are real and changing very quickly, and it's based on the government advice. You know, they're now telling 70-year-olds not to go out the house effectively unless it's, you know, very much essential. And for a lot of us, our patients fit in that target group. So that is having an impact on what we are doing. So I think one of the other key things is that from our perspective as a practice to try to manage through this is sharing the fact that we are a safe place to come. You know, we have the PPE measures in place. We have social distancing. We're wiping down every common surface every hour. That's door frames, door jabs, you know, bench tops. Obviously have the PPE equipment for the doctors as required, hand sanitizer, all of those things. I mean, they're more safe generally to go to your practice than go to the supermarket. So a lot of I suppose the downturn is around fear, and we as a business need to allay those fears. But as we're going through this period where we are seeing declines, you do need to be on this now and try and reasonably predict your numbers forward. But, you know, also use this opportunity as you are looking at the numbers to maybe analyze your business a little bit more than probably you have in the past. So understanding what the service fee is per doctor, and look across the group as to maybe which doctors could help others, you know, improve obviously their profitability. Now, for the most part, most of you owners, you know, you are doctors within your practice, right? So it's probably easy for you to have these conversations. A little bit different for me because I'm a business owner. I'm not in the clinic every day. But the fact is that everyone generally wants to grow their numbers in this space. So I'm just conscious of that.
Well, can I add one comment?
Yep.
So in terms of the power of one, price is a gift that never stops giving, because price improves your cash, improves your profit. If you improve your profit, medical practices, let's say they're valued at a 3 times multiple of profit. So if you improve your profitability, because of your price increase, you've not only improved your cash and your profit, but you've got the multiplier uplift in your valuation. So if you can improve your profit by 100K, you're improving your valuation by 300K, and you're improving your cash. So I'm saying to everyone, yes, we're doing an unbelievable job as a doctor, and everyone thinks I'm in a unique profession. My answer is you still need to know the numbers. You need to understand the story, and you need to ensure that you're running your practice in the most efficient way to optimize your profit, your cash, and your valuation.
Yep, couldn't agree more, Alan. Now, I've said either we've done an extraordinary job, but we don't have any specific questions that I can see at this very point in time. So I think, Alan, is there anything else from, I suppose, your experience? I mean, the other relationship Alan has, Alan actually sits on our board. So that's why he has great visibility to our business, and I suppose how we've been running it. It's been on our board for a few years now, and help guide us in this process. We're very keen to help support practices, not only through this challenge, but going forward, right? I mean, ultimately, as you know, as a practice owner, as I said, everyone looks at the top line number and thinks we're making a fortune, but when you really dig down to it, if you then valued your time in obviously operating and managing your practice, because that's on top of you seeing patients, you know, you probably find you're not actually making that much money per hour from that. And I think that, you know, we want medical practices to be sustainable, profitable, there to serve the community, but also give you a return on all the investment and risk that you're taking. Because ultimately, as Alan said, we sell time. So if you lose a doctor, you lose a massive, or could lose potentially a reasonable chunk of income from that. But a lot of your expense base hasn't changed. I mean, conversely, you put more doctors in, it obviously has the upside to it as well. But I think from our end is that, you know, we want to help support, and, you know, we're going to continue with webinars that are going to do that and support you in your practice. But if you've got any questions, I mean, when we send out the recording of this webinar, which you can share with your teams and your practice managers, once again, please take the advantage of getting access to Alan's software. It'll give you amazing insights. It's a great resource. But if you've got any other questions, I'll make sure my email address is in the communication as well. Just send them back to me. I think if you've got particular burning questions that you would like to have answered, I'm sure most of your colleagues would have the same situation, and I'm very happy to address them and find the right experts to participate. So before I thank you, Alan, I just wanted to, can I thank you very much for your time? I really appreciate it. You know, your support and helping people understand the numbers, particularly at this point of time, is greatly appreciated.
Thank you, Paul, and thank you for inviting me tonight.
Okay. So, so one of the questions I've got, that just popped up, but I'm not sure Alan can help you with this, but he might be able to. What do you feel is the optimum number of doctors per practice? Have you got a sense from your
Paul,
looking at the market?
You would have much more knowledge. I mean,
Yeah.
as I said to you, the medical practice I showed you there had 8 doctors.
Yep.
And I mean, they weren't full-time doctors, but they had 8 part-time doctors, and they made 230,000 profit. I'm sure, Paul, if you ran a practice like that, making 8% profitability and 38% margin, you would be doing a lot of surgery on that practice.
Yes, and I think, I mean, to Alan's point, I mean, it really depends because, you know, I mean, we run, you know, small practices. So we obviously have a small rental footprint. You know, we're not in shopping centres. You know, obviously shopping centres are expensive. It really does come down to you understanding what is the fixed costs of running your business. So in other words, I have to have a receptionist and I probably have to have a nurse on, et cetera, and look at that cost base. Then look at the percentage or the income you're getting, and obviously the percentage of that income you're getting as a service fee. That would give you your break-even number. So beyond that, if you then recruit another doctor, and then whatever percentage they're on, that'll drop X many dollars to the bottom line. But as you know, there's an increase in consumables. You will need to hire more staff. I mean, one of the challenges, I mean, the greatest cost is staff. In any business, it's always the human resources. Now, the problem is you can't have 1.5 receptionists or 2.5. You either have 2 that are working very, very hard, or 3 and have a bit of bandwidth. So that's one thing that we track and measure, is obviously the staff to doctor ratio, and try and manage that as best we can, because that's the biggest cost you need to manage. You know, you want to minimize people having to do overtime, you know, all of these things. And, you know, one thing that we also have as a challenge sometimes is doctors that run late. So staff that suddenly have to do overtime because someone can't manage their time very effectively. Now, in general practice, that can be very hard because ultimately you've got no idea what's about to come through the door, and is it a 5-minute consult or a, you know, 55-minute consult? It's very hard to time manage in general practice, and we are very conscious of that. You know, we're very lucky in skin cancer. We know what people are coming in the door. We can manage that accordingly. But I think that, look, ultimately, yeah, it really is dependent upon too many variables for me to give you a direct number on that. I mean, for us in our clinics, it's around about 2 FTEs, but there's a much smaller footprint. We don't need a lot of the hardware that general practices have to have as well. But look, once again,
I think in your practices, listening to you all the time, it's the size of your actual client base. So when you take over a medical practice, you're obsessed with how many clients or how many patients they have on their database. Yeah,
and also the ones that are engaged versus went there 10 years ago and we haven't seen them since. And bear in mind, once again, you know, all these, you know, every practice has a database of patients that haven't been in for a while. And there are many things you could help provide them with as far as services. And the other thing to consider, once again, as a practice, is the services you offer, right? So, you know, could you put in something which would grow your revenue or value per patient? So there's a thing related to, you know, a patient's value. So if a patient, let's say, comes in and spends $100 on a consult and comes 4 times a year, that patient's worth $400 a year to the practice, right? Now, if you could find another service that they may want, and there's obviously other ancillary services that you can provide, could you grow that by another $100? Well, then that, you know, that volume of that patient has grown now by 20%, for example. So there's different ways and levers that you can do it. As I said, it's unfortunately not a 5-second conversation. But once again, very happy to, you know, if that's a subject people want to look at as far as what additional services can we put into a general practice that patients would value. And ultimately, some of these services, once again, aren't Medicare rebatable. So in other words, they're cash paying services. But, you know, with some of those services, you might want to pay different percentages depending on the tools and equipment you may need to put in. And that's something which you then can discuss and negotiate with your doctors. But I do understand, obviously, the challenges of that. So if there are no further questions, I once again like to thank Alan very much. And just like to let you know about next week's webinar. So what we're doing at the moment, we're doing on Mondays, we're doing a webinar with Professor David Wilkinson, which is an update on the COVID virus, and obviously what the health authorities are doing and how that applies to our clinical practices. And at that webinar, you get to ask any questions you like, and it's been very well received, and do encourage you to do that. The other one is then on Thursdays, we're doing business related stuff. So obviously I did last week one on scenarios, so the different things that might happen in your practice that you would like to, you know, how to manage through that. And then what next week we've got is Stephen, who's going to be doing a presentation on insurance. So basically, you know, are you covered? I mean, the challenge we got at the moment is, does our insurance policies cover what the COVID virus, right? So, you know, really understanding that. So the topics we're going to be talking about: does your policy cover you for COVID? Do you have the right income protection and life cover, you know, in this particular environment? Who is or isn't covered by pandemics? I mean, TAL have announced they're not covering pandemics, which is causing confusion and concern, as you can assume. You know, reassurance around existing policyholders, explain how to claim if you need to do so, and then also the difference between standard contracts and professional contracts. So next week is all about insurance and protecting you and understanding perhaps the insurances you've got, because I think for most of us, you know, we sign on for this stuff and we generally have got no idea as well. So once again, we'll make all these recordings available to you and your teams. Please share them. Happy to do so, and answer any other questions. You'll have my email address. You can email me directly. So thank you very, very much for your time tonight. Thank you, Alan, very, very much. And we wish you all the best in the weeks to come. Bear in mind, it will be over soon, okay? I'll give you that gift. We've got probably another month or two of pain, but I think once again, the patients, once the government starts letting their foot off the brake a bit, will get confidence again. We are going through the crazy period, but it will normalise, no doubt, in the near future. And it's great to see the flattening of the curve. I mean, Australia is in a very fortuitous position that I think will be one of the first countries in the world to be able to go back to somewhat normal life. And until we have a virus vaccine, I don't think we will return completely. But anyway, it's all good. Thank you very much for your time, everybody. Have a wonderful evening.
Thank you.